What's going on, everybody? Welcome back to my channel. So for today's lesson, it's gonna be a banger. Now, a lot of you have been asking me, how do you trade multiple time frames? How do you know when a trend has ended? How do you know when the reversal is gonna start? How do you know? So I thought instead of doing one time frame today, I'm gonna use two, and that would be the 4 hour and 50 minutes. So looking forward to it, and I hope you are. I just want to say, quick disclaimer, this is not financial advice. This is just of my own opinion. Right, let's get started. Structure of this market is clearly to the upside. We can see the market's been pushing up, making higher highs, higher lows, higher highs. And now, what the hell is the market doing now? Well, we don't know. But there's a few things that we have to consider here. If the market is in an uptrend, then we can look for a higher low. But how do we know when the higher low is formed? Well, we don't know. What we will look for is wick rejections to indicate that the market is slowing down in terms of this potential exhaustion phase. And what we'll be looking for is strong bullish candles to the upside to indicate a level's been created. Now, at the moment, we don't see that, so that's one of the things that we're going to be waiting for. Next thing we have to be mindful of is that this market's been pushing to the upside for a very long period of time. So what could happen next? Well, after this higher high was formed, we can see that there was a very big wick here. Now the market's starting to push to the downside. This looks more like a reversal than it does a pullback because, the market will usually pull back, move up, create some sort of levels, and then, make the new high. At this moment in time, it hasn't done that. It's just continually pushed the downside. So this is definitely indicating some sort of bearish sentiment in the market. In terms of price violating structure, the previous higher low is in and around this level here. So there's two things that we can wait for. We can wait to see if the market finally pulls back to create that lower high structure and then look for that continuation to the downside. Or we just simply wait for price to continue pushing down and wait to see what it does. So that's exactly what we're going to do. We're just going to wait patiently for the market to build up. So let's draw this structural low in here because we know if price comes to this level, it's more likely to react to it. And until structure builds, then we don't know whether we're buying or selling. So let's see what happens. We'll continue to push this. The market's continuing to push to the downside. We can see a lower high formation here. Now, we don't know that this is going to be the lower high because in theory, what we want the market to do is pull back to create that lower high so we can identify it and then eventually start getting our structure building up like this. Okay, so what I mean by lower high, let me show you this. This is how you start to use multiple time frame analysis. When you go down to the hourly time frame, look what happens. The market starts to build cleaner structure. So we have a lower high and a retest of that structure. Now with this area here, again, this is not the example I want to show you, but once the market creates a level and price comes back to retest it, then you can be scaling down to like your 5-minute time frames and you can start looking for tradable opportunities. So this is just an example, and this is a very short example because this is not the example that I wanted to show you. And then you can be looking to target some of these structural lows down here. Okay. But anyway, let's get back to the main example on the 4H time frame. So now that we press those 5-minute bars, you can see that the market has continued to push to the downside. Okay, we've come into this key area and look what we see here. We see a wick rejection. So let's remove this and let's reanalyze this chart. We can see that the structure of the market was to the upside. We were making higher highs, higher lows, higher highs. Now the market in theory should create a higher low, continue to push the upside, should trade above this level to continue building a really clean structure, but it hasn't. We see the break below structure. Now this doesn't indicate the reversal for sales yet either, because what we want to see the market do is exhaust to create the first lower high before the continuation to the downside. So until this is formed, we can't say this is sell bias. But there is one thing that we can do here. We can identify that this is a key level in the market. Now, we're not stupid enough, or we shouldn't be stupid enough, respectfully saying, to be saying this is a buy bias market now and let's buy this because it's going to go all the way to the upside. That is the wrong way to think. With this much selling pressure, buying this market right now with a trade that looks like this is ludicrous. Now, there's so many that do it, and I don't understand why they still do it, because this trading style is just done now. It's dead. It's old, okay? Like, it's boring. We want to restructure, we want to read behavior, and then they target back up to these highs. This does not make sense. The pressure of this market right now is to the downside. Hello, it's bearish. Bearish, okay? But what can we do? Well, let's highlight something. 3 phases in the market structure. There's a push phase, there's an exhaustion phase, and then there's a phase where the market just does nothing and moves sideways. So if we look at this example, what phase is this market right now? This current structure and how the market's moving to the downside. For those that said push phase, very well done. Now, what comes next? After a push phase, we usually have an exhaustion phase. Now again, with an exhaustion phase, we don't know how long that exhaustion will last for. But how can we take advantage of this using multiple time frame analysis? Well, let's identify that the structure of this market has not respected this bullish structure or created that higher low to continue that higher high formation. It's continued to push to the downside for a very long period of time without exhausting to create clean structure. Whether this market structure wants to make the new higher high now or whether it just wants to pull back, it has not done that yet, which means there is a strong chance that price will create this structure. How do we find added confluence? Well, our first confluence is a very strong push phase without an exhaustion. Our second confluence is the fact that the market has repeatedly respected this level in the past. The third confluence is this first wick rejection. This wick rejection here is indicating to us that this bearish pressure pushing into this key level is depleting. So for us, that means we need to scale down to multiple time frame analysis. Now, what we're going to be looking for here is 2 things. We're going to be waiting to see how the market develops. Is the market going to pull back to create a lower high formation before continuation? If so, we need to make sure we take advantage of a trading opportunity that allows us to either win our trade or manage our trade to break even, just in case it does this. The next thing is, if the market is going to respect this level, continue up, and we do eventually take a buy, then all well and good, we don't have to worry about this. But for this scenario, we are waiting to see what happens, because if price pulls back to make that lower high in and around this level or around these levels here where the wicks are forming, we could be in trouble if we can't manage our trade. So let's leave this line in here. You might say, well, how did you draw this line? Well, what we want to see in any push phase this strong to the downside or upside, you just want to mark off about 50% as a retracement, just to allow price to breathe enough before we see a continuation. Scaling down to our 15-minute time frame, and just make a note of this, everybody. Price action trends on every single time frame. So the patterns and the process and the procedure of looking for a trade is exactly the same. You're not going to buy this market now because it's in a down trend. So what we have to see the market structure do is eventually violate structure. Now, this is not a trend line. This is just illustrating that price is trading below this level, meaning that any sells that you took below this level with a significant stop loss above this trend line, you are likely to make money. But that's not for you to be trading, or that's not how you should be trading, okay? We want to look for the best possible opportunities. So let's continue to see what happens. We have our confluence. We have our strong push phase without an exhaustion on the 4H. We have a key level in the market, which is this rectangle box here where price is failing to break below. Now, all we want to see is that 4H candle that left a wick behind continue to illustrate that the bearish pressure is depleting, and now start to see a significant sign of bull stepping into the market. So whatever happens now, guys, you are not getting caught up in your emotions and feelings and looking for buys and sells. You are simply waiting patiently for the market to do what it needs to do. You're waiting for the market to create structure that will illustrate to you and to me that we are now truly looking for that exhaustion on the higher time frames. So looking at this, we're still respecting that level. Now, structure is structure. We have price breaking this trend line, and we can see price now created a low and a higher low formation. Now, again, we're not buying the market because we do not have enough momentum, and plus we are not going to be buying into this wick area here. What we want to see the market do is show strong signs of bullish pressure at the earliest signs, that's where on the 15-minute time frame, which will indicate that push phase on the 4H time frame, and then a 4H candle pushing to the upside, indicating that exhaustion. As long as we can get in this trade and manage this trade before price gets back to around 50% of this whole push, then we should be good to go. Because if this is in actual fact a push phase, exhaustion, and a continuation on the 4H time frame, then we'll be in a good position to either manage this trade to break even, or at least win our trade. So let's continue to see what happens. So now we're starting to see a momentum shift here. You can see price is pushing to the upside. Now, when price is in a push phase, remember what we said? We want the market to exhaust. Once we get the exhaustion, we're looking for the retest of this previous level where price was failing to break above. So let's wait for this to happen and we'll see if price comes back to this level. It indeed does. Okay, so price action has come back to this level. Now remember, it's not a single line, it's an area in the market. Let's understand the phase of this. Strong push phase on the 4H. Wick rejection was formed into a key level in the market. Now, if this is going to be sell by structure and the market's going to exhaust and continue, we want to make sure that if we're taking a buying opportunity against a very strong bearish structure, that we can get to break even or at least win our trade before price gets back there. Now what we want to do is identify how we can do that. What we're looking for the market to do is break the structure to indicate bullish pressure for price to come back to respect a level, break above a previous level, come back to retest the level, and then we're going to mark out our trade before price gets back here. So I hope that makes sense, and if it doesn't make sense, then I would watch that back because that's very important to understand. And as you can see here, this is exactly what happens. We have our trend to the downside, where price was trading below. We have our break of structure, our high, a level where price is failing to break above, a strong push phase, exhaustion phase, and now we're looking to take our trade. We'll take this trade as is with stop loss below structure. We'll take a buy stop order, stop loss below structure, and we'll go for our 1 to 3 risk to reward ratio trade. So you can clearly see everything lines up for us, and what we're doing in terms of multiple time frame confluence is taking advantage of an exhaustion phase trade on the 4H time frame. And as long as we can get to break even or manage our trade before 50%, where price is allowed to exhaust back before it continues selling, we're good to go. And as you can clearly see, we have enough range. So let's play this out and see what happens. We should speed it up a little bit. There you have it. We have our take profit. Okay. Now, remember what I said. The 4H time frame is in a strong push phase, and we don't want to be taking buys from the major low to now try and target the major highs when we know that this potentially could be a reversal. So let's get back over to the 4H time frame and take a look at this. Remember what I said. Most retail traders will be down here buying and looking to take profits up here, but look what we did. We took advantage of a single candle's move back to the upside, smashed take profits in a very short space of time, and 1 to 3s have been locked in. Now, we understand that this is a strong push phase, and we may have an exhaustion before a continuation to the downside. We can look for price to come back to a 50% range, or we can look for price to react to in and around a key level. So those retail traders that were buying here because they thought it was a support level, or they thought that it was a demand level, or whatever the lark they call it, they'll be in this trade now. They'll be triggered in, getting gassed, and be like, yep, let's go, baby. And then let's see what happens. Makes sense now, right? Look, trend line break, strong bearish sentiment in the market, pull back lower high, continuation. But you see us, we were smart. And we were able to use multiple time frame confluence to be able to scale down to our 15-minute time frame, identify the exact same behavior and patterns, take advantage of a push phase, exhaustion phase, retest, continuation before the true structure on the 4H kicked in. So I hope that was useful for you. And as I always say, please smash that like button for me, subscribe, and until next time, take care.